Hello, welcome to CDH's Cross-Border Individual Tax Practice YouTube video. My name is Ko Fujimoto. Today I'm going to talk about the Foreign Financial Assets Reporting, FBAR. Okay, Foreign Financial Assets Reporting, we abbreviate it as FBAR rules. So, the first criteria of the FBAR is a dollar threshold. Simple to understand, aggregate balance. If you have a multiple account, please include account with $1 or $10. Anyway, put all together of your foreign, located overseas financial assets. If the maximum value of the aggregate balances, the aggregate balance exceeds at any time of the year $10,000. I'm talking, my grammar is all jumbled, okay? But I think you get the message, right? If you put them together, if the total value exceeds $10,000, you must report all the foreign financial assets, okay? Number two, April 15 is the initial deadline. It's an automatic extension. Extension lasts until, or the deadline of the extended deadline is October 15. You don't have to do anything to extend your FBAR filing. It's an automatic. You still have until October 15, 2022 to report your 2021 FBAR. It's an e-filing process. It's not a paper filing. You go to the website, you fill out the information electronically, and you electronically submit FinCEN 114. It's the name of the form that you submit. What are the foreign financial assets? To make it very simple, I give you a for example, bank account in Japan or India, Brazil, bank account in the foreign countries. Even if it's an American bank, it doesn't really matter. If you have a Citibank account in São Paulo, Brazil, that's a foreign financial assets. Life insurance with cash value. You have an account with the insurance company that has a cash value, that's a foreign financial account. Brokerage account, you have a security in India, and you have different stocks held in that account. You get a report, and that's your foreign financial account too. And you have a pension plan from a company in let's say UK, and you worked for that company for a number of years before you go back to the United States. Then this company has a pension plan, either defined benefit or defined contribution plan, doesn't really matter. That is your foreign financial account. I think the key point is where the account is held, okay? It's not the U.S. company versus foreign company. It's where the accounts are held. All right. So in the FBAR reporting, there are 7 or 6 or even more pitfalls. The falls that you tend to fall into. I'm going to give you several examples. One is very typical. Does not report accurate information or does not report information at all by underestimating the IRS. It's not a good practice at all. Because this is a rule. The obligation as a U.S. resident, if you live in the United States or if you have a green card, you have a citizenship, you must report. So this is not actually a pitfall, it's a big mistake. Number 2, parent setup accounts with your name for gift tax purposes. Under, I think in certain countries, this is very typical. My father say to me, well, I'm assuming, I'm just hypothetically, I'm setting up this example. My father tell me, okay, Cole, you are 5 years old. In the country, in Japan, there's a very severe gift tax rules. So to avoid paying the gift taxes, I'm going to set up account under your name, and I'm going to save some money each year, put the money, small amount each year, but over 20 years, it's going to grow. Well, unfortunately, it's under your name, and if the aggregate balance exceeds $10,000, you must report in FBAR. 3, this case is your parents never tell you, but you have a funeral and you organize or clean up the father's or mother's belongings, and you find out that there's a bank book or certain statement. If you look at carefully, it's under your name. Unfortunately, that is also your financial assets. You must report that. Misunderstood, the $10,000 threshold applies to each account. No. $10,000 applies to all accounts together as an aggregate total. So don't misunderstand, okay? If you have a $5,000 balance account for 3 accounts, then you must report all 3. Make it simple. Some people think that $100,000 is a threshold. No, that's a wrong information. You must have got it from tax software by not carefully reading the page of your tax software. The $10,000 applies to FBAR rule. Okay. Spouse or this dependents account. Unfortunately, your spouse did not tell you that he or she had an account or had accounts in foreign countries for whatever reason, or similarly for gift tax purposes, you set up bank accounts or financial assets account for your dependents. Under dependents name, if their account, if one dependent account exceed $10,000 in aggregate, then your dependent must report. Okay, if the dependent is very small, then you must report as a guardian. Okay. Number 6, you have a signature authority of a foreign bank account. You work for a certain company. This company has an account in foreign country. Company deals with, let's say, people in Brazilian consumers, and has an account in São Paulo. You happen to be an accounting controller, and then you have a right to or power to move the balance. You must report that account in your personal FBAR. Finally, you have an inconsistency between your Schedule B of the Form 1040 and FBAR. Schedule B is the form you report your interest income and I think dividend income. Part 3 of that form asks you specifically, first 2 questions of Part 3 ask you about foreign financial accounts. So you answer a certain way, and you have a FBAR, and also you may not have a FBAR, and also in actuality you have a foreign financial assets. Better be consistent. Okay. So as the last part of my video, I'll give you 2 helpful tips. I hope they are helpful. One is, once you find your past mistakes, please try to correct them by timely action. I list here, it's a little smaller fonts here, streamlined procedure and the DFBAR, delinquent FBAR filing procedure. So I list here 2 separate remedies allowed by the IRS or prescribed by the IRS. There is another one for people who knowingly did not file FBAR. So that's a different, that's beyond the scope of this video. I'm only talking about the non-willful person who did not know the rule. Now I find out, so let's correct it, the streamlined and DFBAR. Anyway, so the point here is timely. You must take an action to timely correct your mistakes. It is how the IRS look at how timely you try to take an action and try to correct it. Okay, that's why I put timely. Number 2, even if your FBARs are perfect, I recommend you as a general conservative and good practice to timely and accurately file your regular 1040. Because down the road in future, if you create certain tax problems, the IRS will look at your track record of timely filing and accurate filing. I think if you extend your return and file it before the extended due date, I think that's okay. But you do nothing but file late. That's a bad track record. And that may affect you. It may not affect your tax amount, but it may affect you down the line once you create a bigger issue and try to discuss how to solve that issue with the IRS. They will look at you and say, hey, this person has always timely filed 1040 tax return. I think that track record is important. Having said that, thank you for watching my video. This is my disclaimer and our CDH cross-border family practice, and we are always looking for new team members, and we also publish a book for cross-border professionals, cross-border families, and cross-border friends. So thank you very much for watching my video. Have a great day. Take care.